the company that paid millions, yet made no money. In the gleaming free zones of country A, there was a trading company that appeared unremarkable. We'll call it BH. It imported and exported electronics across borders, submitted timely tax filings, and kept its paperwork in order. But there was something strange. Despite reporting millions in revenue year after year, BH showed almost no profit, not even enough to raise a casual investor's interest. That's when the tax authority's anti-evasion team took a closer look. At first glance, nothing screamed fraud. But when they zoomed in, the pieces started to fall into place. All of the company's high-value purchases came from offshore suppliers, registered in jurisdictions where transparency goes to die. The invoices? Significantly inflated. That's the trick. By inflating costs, the company reduced its taxable income, making its profits vanish. But this wasn't just about dodging tax. Where the money went next turned this from evasion to money laundering. The funds were sent to shell companies. From there, they were moved through layers of transfers, converted into crypto assets, and disguised as consulting fees and investment returns. And finally, they resurfaced clean and spendable in the form of luxury real estate, high-end cars, and private investments. Tax crime had funded a lifestyle, and the government left empty-handed. But not for long. A joint task force, combining the tax authority, FIU, central bank, and prosecutors, started following the trail. They matched suspicious transaction reports with crypto wallet flows. They connected nominee directors to the company's actual owners. They froze assets before they could be sold or moved. The result? Criminal proceedings, asset recovery, and a bold reminder tax evasion is no small crime. It's a gateway to the shadow economy. Why share this? Because professionals working in tax, AML, and compliance must see how subtle misconduct can escalate into full-blown financial crime. This case is a textbook example of how tax evasion isn't just about underreporting. It's a tool used to hide, move, and clean illicit funds. For auditors and accountants, here's what this story highlights. Don't just accept offshore invoices at face value, request supporting documentation, assess economic substance, and challenge pricing anomalies. Watch for round number transfers, especially to high-risk jurisdictions or crypto platforms. Assess consistency between declared profits, director lifestyles, and capital movements. Flag gaps in employment contracts or shareholder payments, especially when related parties are involved. Collaborate with compliance teams if supplier or customer due diligence throws up risk indicators. The sooner these red flags are noticed, the greater the chance to prevent escalation and protect the integrity of the system. We turn stories like this into interactive case studies, so your teams can practice identifying red flags, tracking money trails, and making the right judgment calls.